Good morning, ladies and gentlemen. My name is Ryan Suter. Now, I'm here this morning with Chris Noone. Now, Chris is the CEO and director of Carly Holdings. Chris has been kind enough this morning to lend us his time and expertise to discuss Carly, their current positioning, and some big news they've just announced as of yesterday. So, as usual, Chris is going to open up with a presentation, and then we're going to open the floor to a Q&A. Obviously, I'll start that one off. And then participants, if you have any questions that you'd like me to ask Chris, please submit them to the Q&A function on Zoom, and then obviously I will ask away. Chris, thank you very much for your time again this morning, mate. It's all yours.
Thanks very much, Ryan, and good morning, everyone. So I'll just need to share.
There we go.
Okay, so Carly is a car subscription company, and we're an early mover in this market, and especially an early mover in the electric vehicle markets as well. Our shareholders include some of the biggest names in the automotive industry, SG Fleet and also Turners Automotive, and Hyundai is one of our strategic partners. We're the only ASX listed company focusing on the car subscription opportunity. A car subscription, the best way to describe it is it's longer than a rental and shorter than a lease. It's the use of a car without the burden of long-term debt or financial commitment. It's simply a monthly recurring payment that covers all expenses. All the subscriber has to pay for is fuel, tolls, or electricity. And it's a flexible alternative to outright purchase or the leasing or financing of a vehicle. How popular is it and how much is it of interest? Our research shows that 38% of Australians would consider car subscription, and that interest increases as the age decreases. So younger generations that are coming through now are even more interested in the flexible nature of car subscription. 69% of Gen Z and 50% of millennials are interested in car subscription. We're already established in key segments of the market in consumer, business, electric vehicles, and also in software licensing. We generate income from our fleet of vehicles, and we're quite unique in the market in that we operate a fleet that we own, for which we secure finance to leverage to buy those vehicles. We also have a partner fleet as well. Now, this fleet is owned by automotive manufacturers or dealers or fleet management companies, and we monetize those vehicles on their behalf. In our most recent results, we saw an increase in subscription revenue of 75% over the previous financial year. And that strong growth has been delivered by strong growth in our vehicle fleet as well. So what is a car subscription? It's one simple monthly subscription fee. It includes registration, maintenance, insurance, and roadside assistance. It's exclusive car use. It's your car. It's not a car that's sitting on the road that someone else is using at some other time of the month. There are no break fees and no upfront deposits. It's a minimum 30-day term and 30 days notice to cancel. There's the ability to switch the vehicles if your needs change. So you might want an economical runabout for a few months of the year. When you get the bonus, you might want to move to a bigger vehicle. When it's summertime, you might want a different vehicle. And when family visit from overseas, you might want a larger vehicle. So subscription gives you the opportunity to change that vehicle. Now, you can't do that when you buy or finance a vehicle. And most importantly, it's not a long-term financial commitment or debt. The best way to look at where subscription fits in the market is to look at the average subscription period. And as I said before, it's longer than a rental, shorter than a lease. You'll see on the left-hand side of this table, car share is usually 1 hour to 1 day and can get very expensive for longer periods of time. Car rental is typically 1 to 14 days. It's very traditional business and can be quite expensive for longer periods as well. Car subscription for Carly, the average is around 5.1 months. And that compares quite favourably to the longer terms of financial commitment, such as lease, loan, and outright purchase, which is usually 2, 3, or 4 years or more. So at that 5 months, we sit very nicely in between rental and the longer term forms of ownership. So looking a little bit more closely at our FY24 highlights, we saw a 68% growth in our vehicle fleet and 66% growth in our owned fleet. Our owned fleet represents around about 65% of our total fleet size now. And subscription revenue grew 75% over the year. And if we look at this graph, we can see that the growth rate for the company is accelerating. The green line is the subscription revenue, and that really kicked up in the June quarter. What we're seeing in the bar charts below are the proportion of asset light to asset heavy vehicles in our vehicle fleet. The dark blue shows the growth in the asset heavy fleet, and also at the same time, we've been growing the asset light fleet as well. So looking at our strategy, we aim to be the #1 car subscription company in Australia. We've had good growth in our fleet and even better growth in our revenue as well. So we're well on the way to achieving that objective. We want to be #1 in the consumer market. We've enhanced our lead capture and conversion and optimization processes. Majority of our customers are acquired online. So digital can be a very cost-effective acquisition method for us and a way to really get out to a large number of customers quite cost-effectively. We're also expanding into electric vehicle market with unique propositions, and I'll talk a little bit more about that later. We want to be #1 in the government and corporate market. We've expanded our customer base in this area, and we've identified a number of very high potential corporate segments where their use cases are very much aligned to flexible access to vehicles that we offer. We've also broadened our referral channels with SG Fleet, which is a very large player in the fleet management and fleet leasing business in Australia, and also our second largest shareholder. We also want to be #1 in the electric vehicle subscription market. We have a unique product called EV Trial, which we expanded in the last quarter, and we've also increased the size of our EV fleet as well. And we also want to be the #1 choice for automotive dealers and OEMs. And this is where our asset light fleet comes into play. We monetize the vehicles that are owned by dealers and manufacturers. Hyundai is one of our big partners in this area, and we also work with a number of automotive dealers as well. The interest of these companies in providing their vehicles to Carly is they want brand exposure for their vehicles. They want to provide trial opportunities so people can experience their models and brand in the market. And also sometimes they're looking just for a revenue opportunity for vehicles as well. So there are a number of ways that we can work with those very large corporate partners and clip the ticket along the way, helping them to generate their own revenue stream. And the big announcement that we made yesterday that Ryan referred to at the beginning of the presentation is around salary packaged car subscription. This is where we're able to offer access to the FBT exemption that's provided by the ATO. This enables the way this is normally applied in the market is through a novated lease for an electric vehicle. And it means that employees can salary sacrifice the cost of an electric vehicle and receive an exemption from the fringe benefits tax. What we've been able to do is secure an exclusive product ruling from the Australian Taxation Office, which means that we can offer electric vehicle subscriptions for a minimum period of 3 months and also provide access to the FBT exemption. So this is a really big development for us. It will assist growth of our normal car subscription business, which includes electric vehicles, and also growth of our EV Trial proposition. We've also partnered with our second largest shareholder, SG Fleet, to also take this product out to their salary packaging clients. SG Fleet is one of the major players in the salary packaging market in Australia, and it's a great benefit for us to be able to take this proposition to their customer base, and it also adds to the number of unique products that SG Fleet is offering the employees of their salary packaging clients. So I've mentioned a couple of times about EV trial. We think that car subscription can play a very big role in helping both businesses and consumers transition to electric vehicles. We know that it can be quite daunting making a big financial decision to buy an electric vehicle. Many people have not really experienced electric vehicles for long periods of time. A dealer can offer a test drive for maybe 30 minutes. You might be able to rent a car for a few days, but there's nothing else that really gives you an opportunity to trial an electric vehicle for a month or more. And that's what we do with EV trial. It simply picks up from all of our back-end car subscription technology and enables individuals and businesses to trial electric vehicles. There's a range of models they can try, a range of different types and sizes of electric vehicles, so that after trialing an electric vehicle, they can understand whether it is the right decision for them to purchase an electric vehicle for the longer term, or if they think they might be more comfortable going to a hybrid or staying with an internal combustion engine vehicle. What we're trying to do is give people knowledge and choice and understanding of how to make the right decisions about longer term purchase of electric vehicles. And we also have a number of customers who subscribe to electric vehicles for the longer term. And what we announced yesterday with the salary packaging means that our EV trial position will be supported because the savings can be quite substantial. For an employee on around $100,000 per annum salary, the saving is around 35% compared to the normal subscription price of a vehicle. So very good value for money that we're offering both our car subscription and EV trial customers. So I'll just play a short video from one of our customers who's experienced the EV trial.
I heard about the Carly EV trial through a mate. I thought, what a perfect opportunity. I'll try Carly and see if electric vehicles are for me. I was a little hesitant going to electric, but the process was super smooth, the technology really straightforward to use. Driving the Hyundai Kona has been a dream. I have saved so much on fuel expenses. Honestly, this car is just perfect. Signing up to the EV trials was super easy. The team was super helpful, friendly. All I did was I popped onto evtrial.com.au, I chose my vehicle and I got to pick it up 48 hours later. The great thing about EV trial is all those things that add up are already included. So your registration, insurance, your roadside assist, your maintenance costs, all covered as soon as you sign up. I definitely recommend the EV trial. It's super easy to sign up, get started. It's a really good opportunity. Now having done the EV trial, I am way more comfortable and confident in purchasing an electric vehicle.
So another unique product that we have is Carly Now. This is a product that we've developed for automotive dealers to allow them to subscribe their own vehicles to customers. With the normal Carly proposition, we acquire our customers through our website and we offer dealer vehicles through that website. What Carly Now allows the dealers to do is actually subscribe to the vehicles who are actually in their dealership. So they can create a subscription essentially on the fly, apply it to a vehicle that's in their stock and provide it to a customer that's in their dealership right now. So it really puts the power in the hands of the dealers to be able to offer their customers the opportunity to buy a car, to finance a car, and also subscribe a car as well. And Carly is the only company that offers this type of on-demand product for car subscription. And we believe we're the only company anywhere in the world that does that. We also have a very strong corporate focus. The use case for car subscription for consumers is pretty much the same for businesses as well. It is flexible access to vehicles for companies that would normally buy or finance vehicles, but for whatever reason, they need those vehicles for shorter period of time. We're going to market with our own business development team, and we also partner with SG Fleet to provide vehicles to their customers who require vehicles for a shorter period than a lease term. So SG Fleet is one of our big strategic relationships. As I mentioned, our second largest shareholder. They're a dominant player in the fleet management, leasing and salary packaging areas. We work with them on a number of different angles. On the demand side, they refer their retail, salary packaging, business and government customers who need vehicles. And on the supply side, they lease vehicles to Carly, but also provide vehicles to our asset-light fleet as well. And these are vehicles that they want to monetize for a longer term beyond a normal lease period. We also have a very strong relationship with Hyundai. Hyundai provides a number of new vehicles into our fleet. We're providing trial opportunities to bring new people into the brand and to also generate revenue for Hyundai as well. What we also do through this relationship is help generate used car stock for their dealer network as well. So we look at Carly's competitive advantages. We have over 10 years experience in the industry, very strong strategic relationships. We have online customer acquisition. It's a mass market proposition for both business and consumer. We're aligned with the growth of the EV market, but not totally reliant on the EV market. Our product is not a long-term financial commitment or debt. We have both direct and partnership revenue, and we're an indispensable partner with large automotive industry players. We do the sort of things that they can't do themselves. We're really good at acquiring customers. We're great at managing vehicles in the field. We're very good at verifying customers before we get access to the before they get access to the market. We have our owned fleet and our asset-light fleet as well. So we have two different ways that we can expand our fleet. One, we require finance. The other, we don't require finance. And we can access excess stock of vehicles within the market at very good, attractive terms. We also have our PeerPass verification platform, which verifies our customers before we get access to the vehicle. This helps us to ensure the vehicles are well looked after, that we don't have issues during the subscription period. And we also have a very low cost of insurance because of our very good customer selection. We also have the ATO product ruling, which now takes us into the salary packaging market and being able to provide the FBT exemption for electric vehicles as well. So we think that Carly is a very strong investment proposition. We're operating in a market that is predicted to be worth over $100 billion per annum by 2032. We're the only ASX listed company focusing on car subscription in Australia and New Zealand. And we don't just offer car subscription, we have EV trial, we have Carly Now, and we also have our salary packaging product as well. We have a proven business model. We've been operating for over 10 years. We know that we can grow our fleet both through the asset light and asset heavy methods, and we can retain customers for around 5 months. We're securing the pathway to profitability. We've identified large consumer business, EV, and automotive industry partnership opportunities, and we've demonstrated success with each of those opportunities. We're scaling both through our own direct activities and also via strong aligned strategic partnerships. And we're supporting the transition to electric vehicles by offering unique ways for customers to trial electric vehicles that will help support the government's aim of moving more people to electric vehicles, but also developing a very profitable business for us along the way as well. So thank you very much for your time today.
Thank you very much, Chris. Really appreciate your time as well as the presentation. We'll just shift into the Q&A now. So the first one I got for you today is obviously, you did briefly explore the salary packaging electric vehicle subscription. I found that absolutely fascinating. Now, when it comes to utilizing this as a growth prospect for the company, how important is it?
Well, this really closes the circle for us. We've been moving towards this for a while now. So we have our core car subscription product. What we've done is add electric vehicles into that fleet. Then we came up with the EV trial proposition, which allows people to trial an electric vehicle for a month or more. Then we also have the strong strategic relationship with SG Fleet. And with this ATO product ruling offering the FBT exemption, it means we can put all of those things together. And one of the most important parts of this is that we have partnered with SG Fleet. They're one of the major players in the salary packaging market within Australia. So we have access to a very large number of companies and some of the biggest companies in Australia and their employees. So we're not competing with our competitors in the market, trying to acquire customers directly through our own advertising methods. We're going through an established channel that SG Fleet already has with many thousands of employees who are employees of their salary packaging clients.
Okay, thank you for the clarification there. Now, obviously, you guys do present many unique aspects, especially as an investor coming to the market. All I just want to focus on for a second is the asset-light, asset-heavy vehicle fleet strategy, right? What advantages does this kind of multifaceted approach bring?
We started life as purely an asset-light company. So prior to COVID, we were 100% asset-light. We didn't own any vehicles at all. And that was a great model for us. There was no impact on our balance sheet. We didn't have to pay interest. We didn't have to borrow any money to buy those vehicles. When we came into COVID, there were massive restrictions on the supply of vehicles. And we found that our demand was increasing. Even despite people being in lockdown, our demand was increasing exponentially. However, we couldn't keep up with the supply of vehicles. So then we started to finance vehicles. And now we operate what we call a hybrid strategy. So we have 65% of our fleet is owned and 35% is currently asset light. But we are open to moving that ratio depending upon the dynamics within the market. We were, a few months ago, up to 71% asset heavy within our fleet. We've brought that back to 65% because we're seeing more asset light opportunities open up in the market. A lot more manufacturers are coming into the industry within Australia, new models being launched. There's a little bit of a slowdown in economy, which is opening up opportunities for us to access vehicles from the asset light side. So it really gives us an opportunity to manage how we use our funding, how we use our finance, how we how we grow, but also when we partner with manufacturers and dealers who have these vehicles, we also gain access to their customer bases as well. So that means that we're expanding our proposition to people who we would normally not reach with our core proposition.
Okay, that's really interesting. Now, obviously, from a demand side of the business, you guys have you've gone through and used the presentation to explore why you're so competitively advantageous. But realistically, from a more fundamental notion, how does Carly differentiate from its competitors?
Yeah, a lot of our competitors really just say, "Do you want a car subscription?" It's a shorter period than owning a car. What we try to do is come up with unique propositions that really speak to the needs within the market. So we developed Carly Now because our dealers were saying we're having people walking into the dealership who might just be missing out on finance, or they might be on working visas, or they might be concerned about the economy, not quite sure if they want to buy a car. So we give them an opportunity to capture that customer, put them into a subscription vehicle of an average period of around 5 months, and then later on those customers can come back and buy a vehicle. With EV trial, we've seen that people are confused about the transition to electric vehicles. They want more knowledge. They want to try vehicles before they make that big purchase decision to buy a vehicle. So that's why I've created EV trial to speak to that part of the market. And also with our salary packaging product as well, we know that vehicles can be probably the second biggest expense of any household. So we want to make access to the vehicles as cheap as possible. And with the access to the FBT exemption for electric vehicles, we really have quite a unique proposition that we can take out to a very large market.
Okay, gotcha. Now, obviously, we've discussed electric vehicles in the market pretty heavily today, but what's your view on the state of the market, how it's going to progress, and realistically, how is Carly positioned to take advantage of where the market's currently sitting?
Yeah, a lot of people thought that the electric vehicle market would be a revolution. It would happen overnight. There were also some skeptics as well. I think what we're probably seeing now, it's more of an evolution than a revolution. It's happening slower than some people think. The early adopters were always going to buy electric vehicles. but we're really sort of moving into the early majority stage of the technology adoption life cycle. And typically there's always a slowdown in any sort of technology industry, and electric vehicles are just the same. There's also a lot of negative reporting in the media, some of which really doesn't stand up to scrutiny, a lot of clickbait articles out there, but it means that people are just confused. So we are sort of agnostic to how quickly the electric vehicle market grows. We have a very large fleet of internal combustion engine vehicles, and we also have the electric vehicles as well. About 15% of our fleet is electric vehicles. So we're a bit ahead of the curve compared to the general market, but we're not putting all of our future purely on electric vehicles. And what we're trying to do is solve a big problem in the electric vehicle market, is people being confused, not having the confidence to buy. And we will grow our fleet accordingly as we see the market, but we're not going to focus 100% on electric vehicles for the interim, but we want to be very much a part of the journey as we move to the transition of the future, which will probably be electric vehicles being the majority, but there may also be some other fuel sources as well.
Okay, so just to focus on a growth topic now, with your fleet size and growing your fleet size, with EVs currently making up 15% of your current fleet, moving forward as you grow your fleet, are you going to try and maintain that 15% margin, or are you going to try and acquire a larger percentage of electric vehicles?
The market will tell us that answer. As I said before, we can grow our fleet through asset heavy by purchasing the vehicles, and we can grow through asset light as well. So we can be very reactive to the demand. We can have vehicles on our fleet in about 2 weeks or more. So we will look at what the demand is coming from both our consumer and business customers and grow our fleet accordingly. We're very much understanding what the consumers and businesses are saying about EVs, and that's changing day by day, and we will adapt to that as required.
Brilliant. Okay, thank you for that one. Now, just one last one from me here. When we're speaking about growth for Carly for financial year 2025, what should investors expect?
Well, we've just announced the salary packaging product, so that will be a very big focus for us, and that's meeting a very big need in the market. And we've really got hardly any competition in that market, but access to a very large number of customers as well, with a very strong proposition. We see our corporate offering growing as well. More and more businesses, government departments, not-for-profits are becoming aware of the advantages of car subscription and putting it alongside their other methods of acquiring vehicles, such as finance and outright purchase. And we'll also see, I think, strong growth in our Carly Now product as dealers, understand that, moving into the future, it's not just selling a car to customer, it's providing a subscription vehicle to that customer is also a great opportunity for them.
Okay, well, thank you for that one. Now, we've just got one here from a participant to finish us off for the day. How does vehicle finance work on salary package subscriptions?
So with the finance for the vehicle, we own the vehicle, or it's owned by one of our asset-light providers. So what the customer is doing is salary packaging the subscription fee. Now, that subscription fee includes the vehicle, insurance, maintenance, and roadside assistance, and also registration. So there's no financing risk with the subscriber in this. The vehicle is owned by someone else, and it's simply a month-to-month subscription. It's a minimum. The ATO stipulates to salary sacrifice, it needs to be a minimum of 3 months. And the employee just pays through their normal pre-tax salary. And if they want to terminate the subscription, they simply give 30 days notice. There's no break fees, and there's no exposure to any finance risk on that subscription. That's what makes it such a great product.
Oh, well, thank you for clarifying that one for us, Chris. Well, that realistically finishes everything off. Is there anything you'd like to leave us with today, Chris?
No, I think that's been good. I think we've covered some good areas and really enjoyed the questions.
Oh, brilliant. Well, Chris, thank you very much for your time and expertise this morning. And ladies and gentlemen, thank you very much for your time. Enjoy the rest of your day. Cheers.
Thank you.